I can't see any reason to sell gold today, and certainly not all in. All right, so you're just looking to, at this chart. We have a breakout. Definitely, we know we have a breakout. We've checked the momentum on all the time frames. We have a very strong trigger here on the 15 minutes. There's a bounce at that point. It means you have an internal 1 and a 2, and you cannot really fall below this level 3 anymore. You shouldn't. If you fall below that level 3, we are mistaken. So you can have a hedge or stop at 2,380, preferably a hedge. I can even have it at 85. We talked about this earlier, 2,300, but we don't want to be too close to the market. It's not even close to the market, actually. But let's just say we have a hedge at 2,380 and buy market. Why buy market? Because what we're seeing is right now a mast, and you're going to get a flag. It's not yet uh, done or conclusive, but the most we're going to get is a flag out of this mast. That's all. So check all the momentum picture. Momentum is, if we really want to be very seriously, very efficient in our trades, we simply try to follow directional momentum. Follow directional momentum means two momentum cycles pointing in the same direction. So we have a breakout on the 15 minutes. We have a breakout on the 30 minutes. The feed, which is of 10 minutes, is the smallest that we usually look at, is positive with an internal leg 1 and the bounce out of overbought level. This is called a leg 1 trigger, internal leg 1 trigger. It's a very strong trigger. It means we're going to get extension. We'll look at that very shortly. We'll take it to the 45. We have a trigger, of course, double trigger on the 45. It's one here and one here. We have really double triggers on the 45, double positive momentum triggers on the 45 minutes here and there. Let's take it to 1 hour. Again, double triggers on the 1 hour. We can round up the labels. We can have an A and a B, and now we're having a 5 swing C, or we can have, probably it's an A and a B because that was a 3 and a 4, so it's now an A and a B and a 5 swing C, and I can begin to update labels in this manner. Correct manner, because this indentation, this is a 1 hour chart, this is a strong chart. This indentation means you have rounded up all the internals into a higher degree 1 and a 2, and I have a neckline here, and I already have a neckline here, so this neckline here drops back here. That's it. You want to equate level 1 with level 3, and the market broke out. So it is true, market shouldn't fall below level 1, 2,380. Actually 2,378. Not even level 3, 2,385, because of this trigger. So it's a maximum opportunity trade. How come? Because we just buy market, say 2,410. The hedge is 2,380, so this is $30. We're going to 2,460 or 2,480. We will look at the projections. We are going to $70, or we are going to, if it's 2,460, it's $50. If it's 80, it's $70. And we are going to this distance in about 24 hours. We should meet target by tomorrow. If we don't get 2,460 by tomorrow, we close out by tomorrow. Probably be 2,440, 2,445. All right, but there is no reason to sell. There's nothing to sell, actually. No reason, fundamental, to sell. We're having now a new deflation regime, probably. The Federal Reserve has won the battle against inflation. All right. And therefore, we're having a new deflation regime. And of course, a new deflation regime would mean that you're getting lesser yields, lesser interest rates, and lesser bond yields. And therefore, it's best to put your money in gold sometimes in order to watch it appreciate, or at least as a safe store of value. And therefore, we're seeing gold moving to higher levels. We have, of course, triggers now, of course, on the 4 hours, on the day, everywhere we're going to look, we're going to find triggers and continuation. We have this is a 4 hour chart triggered. The day, of course, is also triggered. We're not yet above overbought on the day, but of course, if all the feeds are positive, then what do you expect the daily chart to move? What, higher and break above overbought level? All right, so the market is a buy, I believe, and we cannot be sure at this point, but if this is really a watershed event today, if what you're seeing in terms of receding inflation becomes a norm going forward, we get to see lower inflation numbers and higher decreases in terms of percentage in inflation. If this becomes a norm, then 2,300, really 2,300 and let's say 80, this neckline, this head here, 2,350 is a watershed level. Will never be broken again, except maybe after 6 months from now, when there are different fundamentals impacting the world market. Meaning the market has bounced 2,300, has supported 2,340, is going to 2,480, is going to 2,500 before it retracts again sometime in future to test 2,400 and 2,350 and so on. So I think we're not going to be seeing 2,350 for some time, maybe until the end of the year, maybe more actually. But for us short-term traders, of course, the end of the year is actually a long time duration because it's 2 quarters. So the market is a long, all right, unless you are doing the very small, you are trading a very small time frame counter trend, and you are just going to take maybe very small target. We would not short gold at all. All right, it would be very risky. All right, so we will stand out of shorts. That's our bias on it anyway. Hold on to the longs. If we are not yet into the longs, we would want to buy longs, I think, in gold. Have a hedge at 2,380 or even 2,385.